Well, good morning. Yogendra Rana here. So I'll take up the topic today, Bancassurance. Bancassurance. See, Bancassurance is a term used for selling insurance policies through banking institutions. It's a relationship between a bank and an insurance company aimed at offering insurance products and its benefits to the customers of the bank. So the word bancassurance is derived from the merger of banks, means bank, and assurance or insurance, so the word assurance. The concept of bancassurance first originated in France. It was only in 2000 when the process was also adopted in India. Generally, insurance products were marketed and sold through individual agents, and they would solely account for the business in the retail segment. However, through bancassurance, the point of sale and the point of contact for the customer is none other than the bank staff and the tellers. So, bank staff is trained and supported by the insurance company by way of wholesale product information, marketing campaigns, sales training, etc. So, in order to reach out to the bank's customers for the sale of insurance, although the insurance policies are processed and administered by the insurance company, the bank and the insurance company both share the commission. As far as bancassurance in India is concerned, so to begin with, let's have a quick idea about the insurance sector in India. The Insurance Regulatory and Development Authority suggested regulating the registration of insurance companies in India. And the Government of India issued a notification stating that insurance is a permissible form of business that can be undertaken by the banks as per Section 610 of the Banking Regulation Act 1949. However, it was also clarified that any bank intending to take up such a business would be required to seek a specific approval prior from the Reserve Bank of India. Therefore, all commercial scheduled banks have been allowed to undertake the business of insurance on behalf of the insurance company without any risk participation on a fee basis. Hence, the banking and the insurance sector in India comes under the purview of both the IRDA and RBI regulations. Now, as per the IRDA regulatory framework, banks can act as a corporate agent only for life insurance company and general insurance company and health insurance company in lieu of commission. So banks are not eligible for any payout other than their commission. Banks are required to follow a code of conduct prescribed towards both the customers as well as principals, who is the insurer. So banks would not be able to become brokers. The RBI does not permit the banks to promote separate insurance broking outfit. So as far as types of bancassurance services are concerned, banks can sell life insurance like term insurance, endowment insurance, unit-linked insurance, and in non-life insurance, any product like marine insurance, fire insurance, property insurance, liability insurance, etc. And even in health insurance, any health insurance policy can be sold. So it is the most commonly used bancassurance model in India of distribution. The insurer is able to leverage the bank's infrastructure and provides to provides a source of fee income for banks. There is a low level of integration of product management and distribution channels. For instance, the Indian Overseas Bank works as a distributor of the LIC of India Limited. So, as far as the strategic alliance is concerned, the insurer is able to leverage the bank's infrastructure and provides a source of fee income for banks. So, sharing of the database of customers with the insurance company. So there is a low level of integration of product and distribution channel management. For instance, the HDFC Bank works with the HDFC Life Insurance Company and HDFC Ergo General Insurance Company. So the bank is responsible for both product and distribution design, joint decision making and high system integration for infrastructure utilization. For instance, India First Life Insurance Company Limited is a joint venture among Bank of Baroda, that is 44%, Andhra Bank 33%, and the UK's financial and investment company called Legal and General 26%. So the financial services group is a one-stop shop for all financial products and services, that is a joint venture. So marketing is conducted by the insurance staff, and bank is responsible only for generation of leads. So the database of the bank is handed over to the insurance company. It requires very little technical investment. As far as the advantages of a bancassurance are concerned, in the past years, bancassurance has emerged as a very important route for the distribution of insurance product and services both for the banks as well as the insurance companies. If implemented in a well-planned and structured manner, this partnership can be beneficial for all the parties involved, that is the banks, insurers and the customers as well. So, foreign the advantages of bancassurance to banks, insurers and customers. Say for example to banks, bancassurance is the best way to offer another source of income for the banks with little or no capital outlay. A minor capital outlay in turn results in a high return on equity, an addition to the product portfolio, an easy source of additional fee-based profit, increased manpower efficiency as existing bank staff can be trained easily, possibility of a high degree of product sales alignments in a customized way, and support services, and selling financial services of wide range to clients and increment in customer retention, and optimization of manpower utilization to increase productivity efficiency. As far as the advantages to insurance companies are concerned, increase in turnover, increased penetration in both rural as well as urban markets using existing customer database of the bank, very cost effective as the route and network are already set up by the banks, and insurance companies may utilize the currently existing branches and outlets of the banks in the rural and urban areas to market their products. As far as the customer is concerned, he also has the advantages of bancassurance because a purpose to provide one-stop service to all the customers. Presently, convenience is one of the major concerns in managing a customer's day-to-day activity. As the bank marketing insurance product provides them a competitive edge over others, it is possible for the customers to avail complete financial planning services under one roof. Builds high degree of trust. It is very simple to make claims. Easy payment of premium as it can be linked directly to the bank account. Easy access to a myriad of products within a bank, and assured services and advised by the bank as customers get professional experts and trained staff to guide them through finances. As far as disadvantages are concerned, there are greater chances of customers' data security being compromised upon by the banks and or the insurance companies. So the customer might get confused regarding where to invest in case of a conflict of interest between the other products of the banks and the insurance companies like money back policies. There's a hope that a better approach and services will be provided by the banking institutions to the customers. So that is because many banks in India are not known to provide good customer services, but turn otherwise, as banks are also responsible for sale of insurance products. So, in fact, bancassurance is bancassurance is the relationship that both the parties have to maintain, because your bank must have suggested for insurance policies of a certain insurance company. When there are so many options available as far as insurance companies go, have you ever wondered why your bank suggested that one insurance company in particular? This is because the bank has an arrangement with the insurance company which is known as Bancassurance. So through Bancassurance, the bank sells the insurance company's insurance to its customers. The arrangement is beneficial for both bank and insurance company. So Bancassurance refers to the agreement between a bank and insurance company through which the bank sells the insurance product of the concerned insurance company to its customers. Now this is an arrangement through which both the banks and the tied insurance company can gain significant profits. So in such a situation, when it is convenient for the customers, as they can get access to different insurance policies through their banks, and banks benefit from this arrangement as they get the added revenue that is earned by selling the insurance policies. Insurance companies get a wider customer base and larger market reach through bancassurance. So this arrangement brings profit to both the parties involved, due to which it is growing globally. So this bancassurance arrangement between banks and insurance companies, through which the insurance companies can sell products to the bank's customers, is a famous one now, and this has captured the market today because life insurance companies are more dependent upon the banks to sell their products, and the contribution of the banks in selling the life insurance product is greater as compared to the general insurance. So as on date, banks can sell the products of 9 life insurance companies, 9 general insurance companies, and 9 health insurance companies. So they are given the greater powers because sometime back when the Congress government was there, it was the proposal that the banks should be given the license to act as insurance broker, but that could not materialize. Now banks are acting as corporate agents and can sell the products of 27 life and general and health insurance companies in India. Thank you very much.